many lawyers and compliance people and risk people going to be a great panel. That is the necessary ingredients. So my first question is for Aga and Julian. Why Singapore? Why are so many virtual asset service providers coming here and applying for a license? Aga, why don't you start?
Chris. I think the framework here in Singapore has been quite attractive for a lot of players. And if I use Australia as a guideline, there's not the regulations there, but there's a lot of players there that want to pay in a regulated environment. And I think they see Singapore as attractive to become compliant, to show their customers in Australia and around the world that they want to choose to actually get regulated in a better playing environment such as Singapore. I think the government has been very proactive with it, and obviously to set up business is quite easy to do as well.
Fantastic. Julian, what can you add here?
Sure. I mean, I could maybe just add a point to Aga's point. I think regulatory certainty is actually good. And if we think about the recent, bull run in Bitcoin and other digital assets, I think it's at least in part has to do with the fact that regulatory certainty around the world is making it easier for institutional players to actually participate in this space. I think the other thing, is generally speaking, Singapore is already a traditional financial services hub. And for many of the same reasons, VASPs are looking to Singapore as a natural choice. There is a global trend happening, and I think it's happening faster than we even realize, in that the traditional banking and financial services sectors are converging with the digital asset space. And a lot of it has to do with regulatory certainty, but I think that's how we can see that Singapore just becomes a naturally attractive place to do business. I think the last point I'll make is that the aligning to international standards like the FATF standards also is extremely important, I think, in legitimizing the regulatory regime that supports businesses, to put a foothold in one area and then go global from there.
Fantastic. I too love Singapore, permanent resident since 2005, and they do put on a great fintech festival. So now that we've decided that Singapore is the best place on earth, I'd ask, where does a fintech start in terms of applying for a license? What homework do they need to do? And Balan, let me turn this to you, followed by Aga.
MAS had done a very good job. In fact, a great job in simplifying the application procedures as well as the requisite documents to support an applicant's license application. So a good starting place is the MAS website that gives you all the information required for a company to do its research and homework. So a company has to understand that there are 7 activities regulated under the Payment Services Act, and if its business operations fall within any of these activities, they would be regulated and they would require a license to conduct business operations in Singapore. Apart from that, the second stage would really to study the application form in details. A company which is keen in applying for the license under the Payment Services Act has to prepare a host of documents. This range from their business plan to an enterprise risk assessment report, the internal procedure and protocols required to conduct its operations, as well as technology risk management. A company has to make sure that they have all these policies, documentation, as well as the practices in place before they file their application. Next, it is also beneficial for companies to look through the 8 guidelines that MAS had helpfully prepared to supplement the Payment Services Act. Last but not least, if anyone out there who's interested but is still confused over those regulations and requirements, it's good for them to seek independent advice.
And just for our international audience, the MAS is the Monetary Authority of Singapore, and they are the primary financial services regulator in Singapore. So mas.gov.sg is the starting place if you want to research information there. Aga, what would you add here?
I think Balan's laid it out quite succinctly. I think MAS have done a fantastic job in laying out the guidelines for the Payment Services Act, as well as a thorough process of how to do that. I think the biggest challenge really for companies coming to Singapore is really that they believe that their business can just be dropped into Singapore and everything works. And we spend a lot of time working with our clients in terms of doing the gap analysis between where they are and what is expected by the MAS. And I think that's a bit of a shock for some companies because they do believe they have everything in place. So therefore, you do need to do your homework. You need to be prepared that there will be a bridging exercise for them to become compliant. In some instances, there's elements of their business plan not being robust enough or not describing how their processes work, such as acquiring and terminating clients and things like that. I think there's Singapore has traditionally been a great place to come and do business. And I think people have kind of seen that and say, well, we can go to Singapore and get a license and we can keep going. I think my advice is be prepared to do the homework and the hard yards. The licensing is not, it is relatively straightforward and easy to do, but you need to be prepared to bridge your requirements and controls to your company based on the Act. So there is a bit of homework. There's some amazing people here to do that, but it's, I think like you, because I think Singapore is a great place to be. It is worth doing the work and the homework, and it'd be a great place to get regulated.
Thanks for that. And yeah, going into the application, right? So Form 1 is the primary application for licensed companies to apply for either a standard payment institution license or a major payment institution license, the primary licenses that fintechs go for. And I wanted to know if you have anything to add there about the application process itself. And then I thought I might open it up to Nick and Christophe or anybody else who has something to add about any unique challenges with the application process.
I think, so I'm not a lawyer, so I'll leave it to the esteemed panel to talk about the intricacies. But I think from my experience with the companies we've been working with is probably the naivety of the application process, right? It's here are the things you need to fill out and therefore this is what we would do. We are constantly surprised at the documentation that we receive from our clients at how slim it is. And their view was this is good enough for the application, right? So we help them to basically make sure that they have everything in place. But I think the lawyers will have more in terms of some of the intricacies that we're seeing. But for me, it's the detail in the application has been, or the lack of detail in the application is something that we have noticed.
Sorry, Chris, sorry. If I may add here, I'd like to share some insights, practical insights. When I assisted one of my clients, the application process took about 1 year to prepare. That's the amount of time spent doing the homework. So it revolves around fine-tuning the business plan to make sure that they have proper internal procedures, policies, and controls for AML, CFT, and this has to be supplemented and complemented with a technology risk management audit by an external auditor to make sure that the user protection and the other incidental policies pursued by MAS is in place, and it's not just by way of a paper policy, but it is demonstrated in practice. So your preparation time is about 8 months to a year.
Nice. Nick, you've worked on an application. What kind of thoughts do you have on this topic?
Yeah, I mean, I can echo some of Balan's thoughts there. I would 100% agree that the application is not just about what you put on paper. You need to be very careful, actually. You can over-promise on paper and under-deliver in practice, which is definitely not a good sign. So whatever you're putting on your application form, just make sure that you're actually doing that in practice. And when the MAS comes calling, with respect to your application process, you can show them what you've done in practice. So I would definitely echo that point. I would certainly say that you do need to do your homework in a sense that you need to know, as the whether you're the CEO or the compliance officer or the general counsel, whoever you are, and if you're in charge of filling the application form in, to understand your business, understand the operation flows, understand how that applies to the Payment Services Act. So you need to know your business well, but you also need to know how the Payment Services Act applies to you. And that will reflect in a, I mean, I would say our business plan was probably more detailed than most, but that's probably due to the fact that we aren't your typical DPT dealer or custodian or any other service provider that falls within the current or currently proposed Payment Services Act. So we set out quite carefully and in detail all of the operation flows and all of the services that we provide, whether they were ancillary or primary, and applied that to the Payment Services Act so that the MAS could follow step by step in a logical manner how our application was relevant to each specific section of the Payment Services Act and how our operations were relevant to that. So I guess in short, provide as much detail as you possibly can without over flooding things, but also by making sure that the MAS can navigate your business plan in the context of the Payment Services Act as easily as possible.
Christophe, is there anything you wanted to weigh in on here?
Yeah, sure. So Balan mentioned that earlier. The AML CFT aspect is very important indeed. The PS Act requires that crypto asset service providers in Singapore should comply with those regulations, right? The PS Act is following the guidance from the Financial Action Task Force, FATF, to give Singapore a comprehensive regulatory framework in relation to crypto asset services. I think there are a couple of critical measures to ensure those businesses actually comply with the PS Act. The first one is a robust AML CFT solution. So typically crypto asset businesses in Singapore are tasked to file information about transactions they process to high-risk countries. And we all know who they are, right? Basically, they should be efficient in integrating a proper AML CFT technology system that would have a customer DD KYC platform for onboarding and screening, and B, a transaction monitoring solution. In fact, the Ospree solution in association with the Acuris risk intelligence data in relation to PEP sanctions, adverse media, so AML KYC can be very helpful in that regard. Number two, a proper financial crime risk management. So crypto asset businesses in Singapore must perform a risk assessment of what they do, where and what the money laundering risk could be. According to the PS Act, licensed crypto asset businesses should go through a quantitative and qualitative assessment of their core operations. So that's I think that's key. In conclusion, just for my part, I think fighting financial crime, that's what we're talking about here, and having the right AML CFT measures in place should be a priority for crypto asset businesses in Singapore, but also anywhere else, starting from the senior management, which probably should be heavily involved in defining the strategies in relation to that. Both FATF and MAS have confirmed that. The cultural aspect is also very important to ensure that anyone in the firm is fully aware of the money laundering risk and regulations. So therefore, a training program is key. Another recommendation would be to assign a money laundering reporting officer or someone acting in that role. I think that's also very important.
On the application side, the one point I wanted to make is you do want to, in general, keep your application as simple as possible and consistent as possible in terms of how you describe your business within the application itself and also to other regulators. The story of what your business is and how you generate revenues is likely to be the same across multiple jurisdictions. And so when you answer questions to the MAS, just don't say to yourself, oh, I can answer however I want. It doesn't affect my operations in Hong Kong or anything else. That's actually not true. You need to have a consistent story across all jurisdictions and statements you make to the MAS. When you apply for the license, and let's say you get it, a year from now, the MAS is going to have a follow-up question, and they're going to pull up what you said in your application. They say, this is what you told us your business was. Why are you doing this now? So just think carefully when you answer the MAS's questions. Now, going back to financial crime, I think this is a good point to turn to Julian. I mean, Singapore is seen as a very fintech-friendly jurisdiction and crypto-friendly jurisdiction in a lot of ways. But cryptocurrency is still considered to be higher risk for a lot of criminal activity, especially money laundering. Why do you think this perception exists? What should fintech companies do in response to this perception?
I mean, I think the simple answer is because they do pose inherently more risk than kind of fiat analog, right? And as Christophe was pointing to, there has to be a very disciplined and concerted effort to address AML and CFT risks in a very systematic way, right? So, for example, even before you start thinking about AML, specific, controls, you want to think about what digital assets do you support and why do you support those digital assets? What customer types do you support and why do you support them? And then you dive into some of the inherent challenges in managing AML CFT risks, and you think about building specific programs that address those issues. You also, we give this advice to anybody that's working in a novel space, but even more importantly in digital assets. You want to be forthright with your regulator in describing to them the risks that your business poses in a lot of detail, and in sharing with them why you believe that the way that you're managing those risks is appropriate and meets the standards that they expect, and sometimes standards that are not actually written down. And so, this is a discussion for another topic, but the travel rule is a perfect example of that, right? Where there is not an industry-wide standard yet on how to comply with the reporting requirements for the travel rule. And so that just creates very, very inherent challenges. I would say on the other hand, digital assets actually do provide tools for greater transparency depending on the blockchain protocol. You can actually look at the provenance of transactions to a certain extent, and there's some great sophisticated services and tools out there which help you, look back at the provenance and determine kind of whether these assets have been tainted or not. I guess finally what I'll say is that, there's more regulatory scrutiny on AML for digital assets. And the industry is working on common standards for compliance, and I think that that's a very good thing. To give you one illustration of how complex this issue is, we recently wrote guidance for a global regulator. We wrote supervisory guidance for them across all different disciplines that bank supervisors would look at. And the AML guidance was about 30% of all of the guidance that we wrote across all of the different risk and compliance disciplines. It just tells you how important this area is.
One thing I'd add here is back in August, the MAS, Monetary Authority of Singapore, published its paper on enterprise-wide risk assessments, which is how all fintechs who are applying for a license have to review all the AML risks to their business, and they have to submit that as part of the application process. And this is relatively new, maybe 5 or 6 years old. So even old world financial institutions are doing it for the second and third time now. But if you're a fintech, you're doing it for the first time. And it's very important to get right because you submit it with the application. So now I'd ask for any companies that were operating in Singapore in 2019, any crypto companies, they've already applied for a license because the exemption ended back in January 2020. if you are a company outside Singapore or you're thinking about launching in Singapore, how do you start a business where you're working with Singapore customers legally? And I start this question with Christophe first, and then I'll turn it to Nick.
So I think the question here really is, how do the regulations in Singapore affect businesses that don't necessarily have a physical presence here in Singapore, and are you able to still service this market without having much knowledge or ability to navigate the payment services? This is actually an interesting question, and one which is, I think, not 100% resolved as yet. We have quite a number of service providers that are based outside of Singapore, and I can share with you the approach that they've been taking, which has been a cautious one. And by that specifically, we mean that they seem to be holding back on actively marketing or targeting Singapore customers specifically. And at the moment, we have seen some take an even more cautious approach and not service any Singapore-based companies at all. This is obviously dependent on your risk appetite. But I think until that gets resolved, the cautious approach would be not to actively market Singapore customers specifically. And we should be able to obtain some clarity on this issue in the coming months from the MAS.
Thanks, Nick. I agree with that. And I think it's going to be interesting to see how the world approaches cryptocurrency, because we're heading into a world of regulatory fragmentation where you potentially need to be licensed in every jurisdiction where you want to operate, similar to a bank. And that was one of, a few years ago, crypto was so fantastic because it was global. And it was easier to operate across countries. And once you have to be regulated in each country, there's a little bit more bureaucracy you're going to have to deal with.
Yeah, I think there are some sort of commonalities between the regulatory approach, even though there is some fragmentation, which does help. And as I'm sure Christophe will elaborate on, the common occurrence is definitely focus on AML KYC. And the need to have something in place to tackle that, and that will get you a long way for sure. So yeah, I definitely think there is still some fragmentation, but there are definitely some commonalities which will make it not impossible.
Christophe, go ahead.
Oh, sorry. Yeah, I was about to say again, those KYC aspects are indeed critical, and not just in Singapore. All the KYC, CDD solutions in relation to AML are very, very important. And I think we are seeing now in the RegTech space more and more businesses that actually start to sort of run such a business. It's there are loads of aggregators, and so that sort of shows how important it is now.
Great. That's actually my next question, is about how software solutions can reduce friction between business and compliance and make the whole process easier. Balan, maybe I start with you with your thoughts on this.
Sure. Well, let's face it, compliance cost is high, and it's higher where non-compliance is not an option. So how to mitigate this tension between business and compliance? One way is to argue that the information obtained from compliance solutions, may it be analytics, may it be statistics, could be repurposed for business and marketing. I have in mind demand planning, for example, demand planning and marketing, for example. The information gleaned and obtained from solution providers, which are pitched for compliance purposes, could be presented in a different way that suits the other business units of a company as well. Well, if we are looking at traditional and more established financial services, my observations earlier may be very directly applicable. However, if we are looking at new and emerging technologies like DeFi, decentralized financing, then the tension is going to be more pronounced because more time and R&D, research and development, has to be invested, and this is going to be costly.
Nick, you're an old world lawyer like me. How successfully have you integrated, software and technology in your management of compliance?
It's a great question, and I think the importance of integrating compliance technology into your compliance function is cannot be understated. We have had to do that because we want to replicate what an investor would expect in an asset manager in the traditional markets, and with the types of service providers that want to support you, they may not necessarily have the experience in this sector as well. And when we're talking about in-kind subscriptions or in-kind payments or deposits, there needs to be a level of comfort around accepting that type of transfer. And with the vast amount of raw data which you're dealing with, given that, as mentioned previously, with the transactions on the blockchain, it can be somewhat overbearing. We have used a number of service providers, and actually we've been using Ospree, and they've been helping us to create bite-sized and easily digestible reports on in-kind deposits. We've been using compliance screening tools that allow us to create bite-sized and digestible, screening reports that not only allow us to use the information and target that specifically to our compliance function, but also provide comfort to those service providers that we use in the same aspect of our business. So it's certainly crucial. If you find the right service provider that can help you navigate your way through, and your service providers through this aspect of your business, then you're on the right track.
Thanks, Nick. Well, Javier, you certainly have a happy client in Nick there in terms of the software you guys offer. Talk about the practical problems that crypto companies face. What are the KYC and KYC tools that they need, and what are the incentives that they have to use these tools in their business?
Yeah, right. So we talked to many companies over the last few months. One of the things we found was that companies not only struggle in the preparation of the documents that they need to submit for the application, but also when they have to design and implement the processes and controls that involve compliance solutions, they find it very complex and very difficult. And I give you an example. So for some reason, new companies, one of the first things they do when they think compliance is they purchase the license of a KYC solution for 1 year. Later on, they realize that many of their customers, they will be onboarded online, right? So they need to also buy the license of identity verification software, right? Later on, they also realize that they need to buy a transaction monitoring solution that help them identify red flag and suspicious activities of incoming and outgoing transactions in cryptocurrencies. So the problem is that if you buy all these free solutions thinking that they operate in isolation, at the end of the day you will spend much more time and resources, right? And also if you want, there is a new requirement in a number of jurisdictions, and Singapore is one case, that bus companies, they need to comply with a new requirement called the travel rule, which is it makes even more relevant that KYC solution, transaction monitoring solutions, and also identity verification software, they are synchronized and they operate on an ongoing basis, right? So yeah, this is one of the most common challenges that we have found. And regarding your question about the incentive of cryptocurrencies in adopting these tools, to me it's very clear that one of the main reasons that why cryptocurrencies are perceived as posing higher risks is because they are connected to anonymity, right? And all these compliance solutions, essentially what they are helping to do is building these connections between your on-chain processes and your off-chain processes, right? So connecting the identity of your customer accounts with the transactions that happen in the blockchain, right? And many of the regulations are aiming in this direction. So removing the capability of anonymous individuals operate in the cryptocurrency space.
Hey, let me turn this back to a more global question for Julian. We're seeing a number of companies either add compliance resource in Singapore that might otherwise be based in the United States, or really centralize their legal and compliance function in Singapore. Do you see that as a trend? Can you explain it? Do you have any thoughts here? And I might turn it to Aga too, who might also have some perspectives from a Singapore side.
I can't. I mean, I'm certainly observing the trend. As to why that's happening, I think first, I think it's supportive of a general trend where there are several large U.S. firms like Fidelity and others, for example, that are seeing real opportunities in Singapore and in Asia, as generally speaking. And so I think it's supportive of those activities. And there are other firms that are kind of doing the same things. As to, I can't really provide any insight as to, other than for that reason, why would they be moving some compliance resources that would otherwise serve other markets.
Thanks, Chris. Yeah, I think it's hard to, like Julian said, there's no rhyme or reason why. I think from the experience we've had is that, especially from Australian companies, is they see Singapore as a great regulatory environment to be in, and therefore, it is better to place that here in Singapore with everything surrounding that. So they see that as really an opportunity for them to upskill their business and prove to everyone that they are choosing to do that. And I think that's where other companies will be. I also think that globally, people are looking at Singapore, where are we going to go, right? We are still in our infancy in terms of licenses being granted and things like that. And I think once they start to happen and we see more and more successful applications, I think people will then start to say, hey, that is the environment we want to play in. It's trusted, it's sound, it's the center of everywhere else. And I think what they're now doing is hedging their bets. Let's put some of our team in country as a next step to when this starts to happen. We don't have to start from scratch. We can hit the ground running pretty quickly. And I think we hopefully will start to see that trend back end of next year. And I think the speed we're seeing now, Chris, is probably going to quicken as we get those successful applications approved.
Thanks, Aga. Did someone else have something to add?
Yes, sorry, Chris. I to add to Aga's point, I think that general, and maybe this is a general comment, on the discussion of the licensing regime. It is incredibly important for firms that want to go global and that want to build a business that truly scales, and particularly in areas that are novel like digital assets, that they're supported by a legitimate and strong regulatory regime. And you mentioned, Chris, that this is no longer a local business. This is a global business, and which is now becoming a patchwork of local licensures. And having licensure from one very strong regulator helps you build those bridges to the other regulators. And I think that's a really, really strong, it's a really good point. And those forward-thinking firms are going to take the pain now to get the right licensure and to build their risk and compliance programs so that they can build upon that for future growth.
Right. I'd also mention for fintechs looking to be licensed in Singapore, the MAS requires you to have a designated compliance officer. And by and large, it's helpful to have that person in Singapore because they are likely to be familiar with the Singapore regulations. Now, you can outsource it to a headquarters, a group headquarters like London or New York or wherever, and have that be your designated compliance officer. But that person is going to have to be familiar with the Singapore regulations. So that is also, I think, one specific point that's driving some of this trend. Now, I hope that we've inspired everyone to love compliance and regulation. That's my dream for this panel. But it's possible that we haven't. And so I'm probably going to open this up to everyone, starting with Balan. What are the implications of a virtual asset service provider if they do not meet regulatory obligations? They say, yeah, this is all cost, I'm going to lose customers, I don't want to do it. What is the downside if they do not comply with regulations?
I usually tell this to my clients. Compliance cost is high. Try non-compliance. It's going to be higher because you are going to attract civil and criminal liability. And that is something that all serious crypto companies should strive to avoid.
I'm going to open this to everyone. Christophe, do you have anything you want to add here?
Yeah, simply it's not about liking compliance and risk. It's really about, you know, just complying with the regulations in place. I mean, I think the risks are too high, and if you know, you've got the right solutions, and again, there are plenty of good solutions in the market, I guess you'll be fine.
Javier?
Yeah, so my comment here is that for those of us that have been in the interacting with the crypto space or digital asset companies, we know that without compliance or without paying attention to compliance, it's really difficult to scale up a business. So it's not realistic that a company can really succeed right now. Maybe like 5 years ago, there was not too many regulations in place, but right now the question is, there is no option, right? So but also there is a practical reason. So if companies in this space, they need to have interaction, for example, with banks. So it's relevant they have like a common language. So they have a space, a zone where they can interact. So it's not only the cost of compliance, but also it's creating the building the common language, so these two areas can interact. Right, so we know that banks are heavily regulated, so it's really hard to think that a bank will interact with a fintech that is not regulated at all, right? So there are so many frictions that will happen, and that kind of what we have seen is that in a way that stopped the industry to grow faster, right? So we can see also compliance as a way of consolidating this industry, and from there, things much better things are going to happen.
To add on to that point very briefly, we've been helping unregulated businesses that aren't even applying for a license, with KYC being done by banks or financial services companies, because they have to do KYC on all their service providers. So compliance, even if you think you may not need a license, you need to get your head around compliance, because your customers may require it and your investors may require it as part of a sound business model. Aga, what would you add on this?
Compliance is mandatory. You know, as like Balan said, it's not an option. If you want to do business here, you need to become compliant. I also support Christophe's view. There are some really good service providers here to help. It is still fragmented, and you know, there are groups working together to bridge that gap for small, medium enterprises, to make it easier for them to navigate through the Payment Services Act, integration of third-party suppliers, and now the new travel rule, right? So I think you'll see shortly, you know, middleware or aggregators of all these services that companies can use that will make their life a little bit more easier and not so expensive and quicker, because we are learning through this whole process. So I'm very bullish about where the industry as a whole is going around technology to support the great companies that want to come here. So yeah, I'm looking forward to it.
Nick, I know you love compliance. But if you didn't, what would be the reason that drove you to comply anyway?
It's interesting. I've been working in this industry, moved from, as you mentioned, being a traditional lawyer in a private practice law firm. And when I started in this industry, you saw a lot of, what we call regulatory arbitrage from companies in this space. Looking for the jurisdiction that allowed you to be licensed with the fewest amount of requirements to get that license possible. And those avenues are drying up. And I kind of would invite the audience to look at compliance in a different way. Don't look at it as a mandatory function. Think about what the purpose of compliance is. It's about providing your clients, your customers, with the protections that they require. And think about, what would your clients, and as you said, Chris, what your investors, what your users actually want to see from a service provider, from an asset manager, from an exchange, whatever you are. If you choose not to comply, you are in effect servicing quite a small niche section of the market that doesn't necessarily want to see these protections in place. Aside from the cost of actually having to pay any fines which come your way, or having to pay for compliance solutions to be put in place later, there's actually also an opportunity cost to not obtaining the market share or the client base that you would have otherwise been able to obtain had you been compliant. And that's certainly something that we are experiencing firsthand. We have seen the demand for our product increase drastically as we've seen more regulatory and clarity within Singapore and clarity around the regulations in this space.
Julian, what can you add here?
Sure. So let's think about it this way. Put yourself in the chair of a fintech founder. One of the things that you're thinking about, ultimately, is what your exit strategy is. In addition to scaling your business and building your business, et cetera, you always have an eye for, who could I be acquired by? How could I potentially, add value? How could I bring back value to my investor base? And so, before Promontory, I worked at Visa and I led our risk due diligence for all of our acquisitions. And I can't tell you the number of deals that we passed on because we did not have faith in their compliance programs. We did not have faith in their risk management programs. It was just too expensive. No matter how compelling or interesting the business might be, what we called the Visa tax, which was what we needed to invest in that firm to bring it up to the level that we felt comfortable, it just didn't make sense. And so this is just foundational, especially if you're in financial services. That's really not negotiable. And think about it as an investment in the future and in the potential for your business as a whole.
Julian, I agree with that. And I think that also goes to where you want to base your operations. I know there's some businesses that may say, oh, I'm just going to operate in a very small jurisdiction with no rules, and I'm compliant in that jurisdiction. And so everyone should be fine dealing with me. That's actually not how it's going to work in the long term. The major institutions and investors will just not work with you if you're working in one of these haven jurisdictions that they don't have robust compliance requirements. So while there might be a few of those countries left and you might be able to get away with it for a while, that time is ending soon. So you better have a business model that can be compliant and that you'll be able to deal with the best customers. Otherwise, really, what business do you have? Now, all that said, I thought we had a great panel. I was really happy, but it's possible I've missed something. Does anyone else have anything they'd like to add? Wave your hand. Otherwise, I'm going to declare victory. I think our audience now knows everything there is to know about navigating the Singapore regulatory framework. But I hope you believe we're all pretty friendly, and so feel free to reach out to any of us individually. LinkedIn, Google, it all works. Thanks, everybody. Thanks to IBM and Osprey.